Novo Nordisk just delivered the kind of quarter that should normally reassure investors. Earnings beat expectations. Management raised its full-year outlook. Wegovy remains a powerful growth engine, and the new Wegovy pill is gaining traction rapidly. Yet the stock still came under pressure. That tells us something important. The market is no longer judging Novo Nordisk simply by asking whether Wegovy is growing. The question has changed. Investors now want to know what comes after Wegovy. Can Novo maintain pricing power as competition intensifies? Can CagriSema become the next major growth driver? And can management rebuild confidence in a pipeline that has recently produced some disappointments? The easy growth may be over. Now Novo has to prove it can create the next growth cycle. Novo's Q2 numbers do not look like the results of a company in trouble. Adjusted sales increased 7% at constant exchange rates, while adjusted operating profit rose 11% and came in well above market expectations. Management also raised its full-year outlook. So the obvious explanation, investors sold because earnings were weak, doesn't hold up. The more interesting question is what investors were looking beyond the quarter. When a company beats earnings but the stock still struggles, the market is usually pricing something that the income statement does not immediately show. In Novo's case, that concern is increasingly about the durability of growth, pricing pressure, competition, and whether the pipeline can replace today's blockbuster-driven momentum. One of the strongest signals from Q2 was Novo Nordisk's decision to raise its 2026 outlook. Management now expects adjusted sales and operating profit growth to range from flat to a decline of 6%, an improvement from the previous range of -4% to -12%. On the surface, that is clearly positive. But market psychology is about expectations, not just direction. Compared with the extraordinary growth Novo enjoyed during the early Wegovy boom, the new guidance still points to a much slower business. That creates an important distinction. Novo is improving its near-term trajectory, but investors are still waiting for evidence that the company can return to sustainable, high-quality growth rather than simply stabilize after a period of rapid expansion. The most important point investors should not miss is that Wegovy itself has not suddenly become a weak product. Demand remains strong, and the oral Wegovy launch has added another important growth channel. Novo has reported millions of prescriptions since the pill launched, while weekly prescriptions continue to expand rapidly in the United States. This matters because the current investment debate is not about whether Novo still has a powerful commercial franchise. It clearly does. The problem is that expectations have become much higher. Wegovy was once the answer to almost every growth question surrounding Novo. Now investors are asking how much longer that engine can sustain exceptional growth, how much of the volume translates into profitable revenue, and whether Novo can build something equally powerful behind it. The oral Wegovy launch is actually one of Novo Nordisk's strongest recent growth opportunities. Prescription momentum has been rapid, and the pill is reaching patients who may not have previously used GLP-1 therapy. That is an important positive signal. But strong demand also raises expectations. Investors are no longer asking whether the pill can sell. They want to know how quickly revenue can scale, how much of that revenue translates into profit, and whether the pill can expand Novo's franchise rather than simply shift patients from injections. This is where market psychology matters. A product can be commercially successful and still disappoint investors if expectations were even higher. For Novo, the bar has moved from proving demand to proving durable economics. The obesity market is expanding rapidly, but capturing that growth is becoming more competitive. Novo is no longer operating in a market where strong demand automatically translates into easy revenue growth. Eli Lilly's tirzepatide has created a powerful alternative, increasing pressure across patients, physicians, payers, and pricing. Novo therefore has to compete not only on demand, but also on access, product differentiation, manufacturing scale, and economics. This does not mean Novo's franchise is weakening. It means the company has to work harder to convert market growth into profitable growth. And that distinction is increasingly important for investors. The bigger the market becomes, the more competitors want a share of it, and the more difficult it becomes to assume that Novo will capture the economics automatically. CagriSema remains an important part of Novo's future, but its latest data did not provide the competitive advantage investors were hoping to see. In the Reimagine 4 trial, CagriSema produced substantial weight loss, but it did not demonstrate non-inferiority to tirzepatide on HbA1c. The issue is therefore not that CagriSema suddenly became an unsuccessful drug. The bigger question is whether it can be differentiated strongly enough to become a major growth engine in a market where Lilly is already extremely competitive. For investors, that distinction matters. Novo does not simply need another obesity treatment. It needs products that can create meaningful incremental growth and defend the economics of its franchise as semaglutide matures. CagriSema is only part of the bigger question surrounding Novo's pipeline. Recent setbacks, including the ziltivekimab program and impairments involving certain pipeline assets, have made investors more selective about the company's future innovation. This does not mean Novo has a weak pipeline. It means the market is demanding stronger evidence that the pipeline can consistently produce the next generation of important medicines. Management has responded by emphasizing faster R&D execution, learning from clinical setbacks, and exploring bolt-on acquisitions. That response is encouraging, but the proof will come from results. Novo has already demonstrated that it can build a blockbuster franchise. The next challenge is demonstrating that it can repeat that success rather than depend on one extraordinary product cycle. The biggest change in Novo's story is not a single disappointing number. It is the question investors are now asking. During the Wegovy boom, the market focused on demand: how many patients could Novo reach, how quickly prescriptions could grow, and how large obesity treatment could become. Now the focus has shifted toward durability. How long can semaglutide sustain strong growth? How much pricing pressure will competition create? And, most importantly, what replaces today's blockbuster when growth eventually normalizes? This is why a strong quarter can still produce a weak stock reaction. The market is beginning to value Novo on the credibility of its next growth cycle, not simply the strength of its current one. That is the real psychological shift, and it explains why the easy growth is becoming harder to sustain. Novo's management appears to understand that the company cannot rely on its existing formula indefinitely. CEO Mike Doustdar has emphasized the need to move faster, learn from clinical setbacks, and strengthen the pipeline. The strategy includes accelerating R&D, exploring bolt-on acquisitions, and expanding beyond the company's traditional concentration in diabetes and obesity. That response is encouraging, because management is addressing the issue rather than defending the status quo. But there is an important distinction between recognizing a problem and solving it. Investors now need evidence that faster execution can produce meaningful new assets. Until that happens, every pipeline setback will carry more weight. The market is effectively giving Novo a new assignment: turn today's blockbuster success into tomorrow's diversified growth platform. Novo's future does not depend on a single catalyst, but three areas could materially change investor sentiment. First, the Wegovy pill needs to demonstrate that strong prescription momentum can translate into durable, profitable revenue. Second, CagriSema still has the potential to become an important product if regulatory progress and commercial positioning improve the market's confidence. Third, Novo's pipeline strategy could become much more credible if management delivers stronger early-stage programs or disciplined bolt-on acquisitions. These catalysts matter because the market is not asking whether Novo can survive. It is asking whether the company can create another decade of growth. If one or more of these areas begins to exceed expectations, the current pessimism could reverse surprisingly quickly. That is where the potential upside in the narrative lies. The competition between Novo Nordisk and Eli Lilly is becoming a test of who can build the stronger obesity platform for the next decade. Today, the battle is about prescriptions, market share, access, and pricing. But tomorrow, the winner could be determined by something deeper: who can consistently develop better molecules, expand indications, protect margins, and replace products as they mature. Novo still has enormous advantages: scale, manufacturing expertise, global reach, and one of the strongest obesity franchises in the world. But Lilly has demonstrated that Novo can no longer assume technological leadership will remain uncontested. For shareholders, this makes the pipeline critically important. The next phase will be less about riding the obesity wave and more about winning the innovation race. Novo Nordisk is not a broken growth story. Q2 was solid, guidance improved, Wegovy remains powerful, and the oral franchise gives the company another opportunity to expand the market. But the investment case has clearly become more demanding. The company can no longer depend on one blockbuster to answer every question about its future. Pricing pressure, Lilly's competition, and pipeline setbacks have raised the bar. For shareholders, the key question going forward is not simply whether Wegovy keeps growing. It is whether Novo can turn today's enormous franchise into a sustainable platform for the next decade. The easy growth may be over, but that does not mean the opportunity is over. It means the next phase will have to be earned. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.